the bank.
Hey Brett, how's it going today?
Good, Ange. How are you?
Good. Well, that means it's another episode of Money in the Bank, the podcast where we talk about all things related to personal finance and more. So we got another correction.
Oh, good. People keep changing things on us.
It's good. We appreciate hearing from you guys. So, actually found out that we had said that the IRA limits in 2019 were not increasing, but they are increasing by $500. So they're going from $5,500 to $6,000. So, and kudos to the listener who told us that, because he is aiming to max out his 401k and IRA, or just IRA this year. But anyways, if you're maxing out your 401k or your IRA, we are very proud of you. That is really awesome to do.
Yeah, good that you can do that. Good idea to do that, right?
Or good goal to shoot for if you're not there. It's fun to increase it. I know, we've always kind of focused on increasing our 401k contributions every single year. So I've been in the workforce for 6 or 7 years now, and every year I try to bump it up a little bit. And before you know it, 1% every year really makes a difference, and you get to a really high savings rate, which is really great. And then we got feedback from another listener that said some of our audio had some banging in the background at a couple different points. So we are going to try to correct this. Not this week, but future weeks, we are actually hoping to start getting into a sound booth. So our sound should get a lot better.
Yep. Well, or maybe somebody will just bang on the door of the sound booth. We don't know. We can't control these things.
That's true. We live in an apartment complex now, so our neighbors bang around. There's only so much we can control, but we are going to move into a sound booth, so hopefully it gets a little bit better for you guys. But we appreciate all of the feedback, really. Any critiques or feedback you have, we love hearing from you, and we will do our best to correct anything you guys say. So thank you. All right, so there's a big issue kind of going on that I feel like if we don't talk about this on the podcast, it's going to be the elephant in the room. You got to guess, Brett? You got to guess? This will be your trivia question.
Probably has to do with the government, if I had to guess. It's on everything that I see nowadays.
Yeah, so I don't know how I think we have to say something, because 800,000 people right now, based off a news article I saw, are without a paycheck. They've officially missed a paycheck. This is the longest government shutdown we've ever had. I don't keep up with the news, so I'm not sure if it's close to ending, but I don't know if the public knows that anyways. And more importantly, I don't know if the workers know that. So
as of right now, I don't think it's close at all. So
sweet. All right. Well, it's already the longest one by far, which means in past shutdowns, there's always kind of been this threat of you're not going to get your paycheck until the budget gets approved. But it's either happened and then 2 days later you get paid because the shutdown's over, because I think it was not this it was pretty, I think it was 20-ish days into the shutdown that they actually missed their first paycheck.
Right.
So this stinks, and I really feel for a lot of people, and if you are affected by this, I am very sorry, because I can't even imagine going to work every day and then they're like, we're just not going to pay you on Friday. I'd be like, no.
Yeah.
To me, it's beyond whatever your political affiliation is. Whenever there's one of these shutdowns, I just feel like it's not fair. For all the people that are going to work every single day, and if they don't, then they could lose their job. Then why don't they get paid? It just blows. I don't understand it.
Right. Well.
But it is what it is. So we wanted to do an episode talking about what you should do if you're not getting a paycheck and where you should turn to get money. I feel like this is something that if there's preppers in terms of the personal finance world, I feel like this is my scenario that I've been prepping for my entire life, because when I was younger, there was some legal stuff going on, and my bank account actually got frozen when I was 16, and it sucks to not have access to your money. So I can kind of in theory imagine what people feel like. And it was 2 months I didn't have access to my money, my bank account, and instead I had to rely on the cash that I stored away in my drawer or whatever. And so I feel like I bring that up because the first step, if you're not getting a paycheck, is this is the time to tap into your emergency fund. Right. So if you've squirreled anything away, or if you were like little Angela and you hid money in your sock drawer, like this is the time to dig that out and use that first.
I think preppers is a great example, right? Because this is the doomsday scenario for the people and the huge amount of people in the United States that live on a paycheck to paycheck scale, right? And many of them, not all government employees live on paycheck to paycheck, right? A lot of them are doing okay, but all the ones you hear about in the news, there's a huge amount of them that are in this model, right? Probably more than 50%. A lot of government jobs don't pay like that well, so it's hard to get out of a paycheck to paycheck model in the first place. So that is affecting a ton of people, right?
Right.
The media is not necessarily just blowing it out of proportions. To some degree, they love to pull on the drama angle of it, but there are still a tremendous amount of people in this situation for real.
Absolutely. Yeah. So if you find yourself in it, because a lot of people will, I guess the big thing is focus on your essential expenses first. So this is a great time to practice like scaling back in life too, because and I'm sure many people living this life can attest to this. Like, this is not the time to go out to eat every night. This is not the time to like take a vacation, right? Like this is the time to go on that like peanut butter and jelly diet and obviously
or beans and rice. Even more cost effective than PB&J, right?
And healthier, yeah. But beans and rice and really, rely on, if you have food in the pantry left over, like get creative. But, I feel for a lot of people because a lot of people going through this have kids and everything. And you have, like, I know kids are picky. So, like, I guess this episode is going to be focused more on, like, you have some essential expenses that you have to do something about, like eating. And here's some things to tap them. So, tap into your emergency fund. But the next point that I want to bring up after emergency fund, a lot of people won't have emergency funds, so we're going to explore a lot of other options out there that you can tap into if you need money. But one thing that I want to mention right off the bat as well is if you are struggling to pay your mortgage or your car payment or your student loans, please, please, please call your service provider. A lot of them right now will work with you if you cannot afford your payment because you're in this situation. If you are a federal employee not getting your paycheck, call your mortgage provider. A lot of them are willing to defer your payments, delay your payments, and not charge you interest on top of it. They're just willing to, bridge the gap, I guess, because they understand how many people this is affecting.
A lot of banks, at least one credit card company that I heard of. I don't know if the big credit card companies are offering that, but a lot of bigger companies and banks have spoken out and said like, oh yeah, we're totally willing to work out. It's a great PR move for them, but definitely take advantage of that, right?
Absolutely.
And even if they haven't like announced it, call anyway and just check because maybe every day that this goes on, more and more people are going to be in the situation where they can't pay either the first one or the first payment or the second payment if we get to that point. And they're going to have to come up with a solution. They're not just going to like close all these loans and foreclose all this stuff. They don't want that to happen, right? This is out of their control more than anything. So
absolutely. So yeah, I know like I hate picking up the phone and calling anybody, but this is one of those times where it's really, really worth it to pick up the phone and explain your situation. And actually, even if you're not, like if you ever find yourself in a position where you are struggling to meet all of your bills because of loss of a job or a lapse in paychecks or something, it's never a bad idea to call the bank and explain your situation and work out a plan. Because a lot of times, like, with mortgages, it's to the bank's advantage to figure out a plan to keep you in your house versus going through the very expensive foreclosure process. So, like, never be afraid to have to call them and explain what's going on instead of, like, throwing your hands up in the air and being like, oh, no, I'm going to lose my house. Like,
right. What do you have to lose, right?
Yeah, exactly. So, okay, so we talked about, calling the banks to lower, I guess, the expenses that you do have to pay for in this time. And then any expenses you do have, tap into your emergency fund. And I know a lot of people do not have an emergency fund or they do not have a well-stocked emergency fund. That is something that, a lot of people lack. So what do you do if you find yourself in need of money? I'm going to kind of rank this in the order that I would seek it out and, feel free to tweak it to your situation or what's going on in your life. So if I was in your shoes, the next thing I would do is call up, and as much as I hate doing this, I would talk to my friends or family, close friends, because you never want to take loans from like, people who would get weird from, but I know I have a couple friends in my back pocket that if I was going through a really, really tough time and needed like $500 to make it through, they would give it to me and let me pay them back at a later date without paying any interest on that, right? They would just say, here you go. Like, and I know for me, if I knew people going through this right now that were not getting paychecks, like I would be happy to help my friends in this situation. I think this is where like the whole saying of like, it takes a village, like we all have to be there to help out, with each other in these times where people do need a little bit of assistance. So.
Right. And I mean, rules still apply from if you were giving somebody a small business loan or friends and family. Lending money is pretty risky, right? Because it's very, very easy and very common to destroy friendships. So the correct approach is to loan someone the money out of the right amount of money that you don't expect anything in return for it. Right? You don't even expect to ever see that money again. If you get it paid back, great. But if you loan it out to somebody and there's all these strings attached to it and like somebody can't meet obligations, you will totally destroy that friendship. And which one of those is worth it?
But in this odd situation too, like, I guess unless the budget never gets approved federally, but that seems like a low risk. So in this weird situation, it's kind of like, that the person is getting this money, they just don't have it right now.
Correct.
So it's like lower risk than usual. Like usually if somebody's like, oh, I'm living paycheck to paycheck and I have this like $1,000 emergency pop up, that's like a lot riskier than this current situation of like, hey, I called my bank and they're still saying my mortgage is due tomorrow no matter what, and helping somebody out in that situation. So that was what would be what I would do. But again, I know not everybody has that support system, or maybe sometimes your friends and family might be working in a similar field as you and they don't have paychecks either. So what's kind of the next line down here? So another thing to look into is a personal line of credit. Or I guess some people can get these through their mortgage company. So personal lines of credits are actually kind of interesting because you still have to get approved for this, and the approval process might take too long. But some people already have these lines established with their mortgage. So all you would do in this situation is draw on your personal line of credit. So typically when you get these set up, it'll be like, okay, you have $10,000 on this line of credit. But the beauty of it is it's different from a loan. So you're not paying interest on that $10,000 until you start drawing on it. So if you have one of these established, you can simply go to it and say, okay, I need, $1,000 to pay my mortgage this month. So I'm just going to take $1,000 right now. And then you're only paying interest on that $1,000 and not the full line of credit.
Right. So you're approved up to a certain amount and you can like pull from that pot as much as you want to. And your only obligation to pay anything back and pay interest on is on the money that you take out of that pot.
Exactly.
At any given time.
Yep. And so the interest on this will be typically the rates I found online were between 7 and 20%. Now, sometimes if you have this connected with your mortgage, you might be lower, in the 4 to 5% range. So definitely not like super low interest rates, but the beauty of it is it functions more as you're only paying on what you take out from the pot, right? So that's,
if I take out $1,000 this week, I could go back next week and get another 1,000 or something, right?
Right.
It's not like it's a one and done.
Nope. It's like up to $10,000. That's the fictitious limit I came up with. But you could take 1,000 this week, 1,000 next week, up to 10 weeks until that line is at the maximum.
Okay.
So these can be a good option for people to look into. Another option instead is to do a personal loan. So the difference here is instead of that $10,000 where you can take $1,000 out as you need it, you would get the full $10,000 right now. But the downside is you start paying interest on that all right now.
Okay. Where do you go to get those?
Banks, typically.
Okay, so that is all coming from the bank. That doesn't have anything to do with your investment stuff, right?
Correct.
Okay.
And thank you for bringing that up, actually, because I did want to mention that piece. So when you're looking at taking out a personal loan, you would be paying the bank interest. Now, this is like a very interesting situation where it's not like you're going to keep these loans for a long time because, again, it's just because you haven't gotten that paycheck, right? So if you if you need a loan and you want to get the lowest interest rate possible still, right? Because even if you're only keeping it for a month, you want to minimize that. Another interesting place to turn that I don't recommend very often, but this could be a niche situation where it would work, is to actually take a loan against your 401k. And so you can actually go into your 401k plan and look at loan options and say, yep, I need this much money, and you'll get a check for that amount. And the beauty is then if you don't spend it all, like if you take out a bigger loan than you need in the next month or so, you can just pay it right back. And any interest that you have to pay is going back to yourself.
Right. So there's some penalties on drawing the money. They're very low for setting up a 401k loan, but right, you pay back the interest to yourself on the money gained, which is an interesting trick. So we have done that before in the past for like very short term, like, money infusions for different projects that we've been working on. And right, as long as you're going to pay it back like immediately, it works as a pretty low cost investment vehicle. It is not good for long term. It is not good if you don't know that where the money's going to come from to pay it back from in the short term. Right.
So again, this is more for people who know that they're getting their paycheck, not people who are currently living paycheck to paycheck and come up with like I want to go buy a brand new car for $20,000. I'll just take out a 401k loan. Like, that's not the situation. If you are taking out a 401k loan, I really, really want to stress that I wouldn't plan to keep it on your books for more than a few months, right? Mm-hmm. Like a very short-term, quick solution to something. It can be very helpful in these like niche situations, but you don't want to take that money out and lose all of that compound interest for a very long time, right? Mm-hmm. So, but that is one option. And typically when we've done this in the past, you can go right online and like walk through the steps of what it would take, see how much it costs, see what your interest rate would be. I know our interest rates have been right around in the 5% ballpark. And again, you pay that back to yourself. And then we typically turned around and got a check within, 5 to 7 business days. So It's not instant, but it's still pretty quick. So
right, and low cost.
The next solution that you could do is simply just put everything on your credit card. Now, this isn't necessarily great depending on the timing of everything, because you might start paying interest on this, which interest on credit cards can obviously be very high. I mean, I know some people, I think it's like, super rare, but I've heard of some interest rates as low as 8% on a credit card. I've never seen that.
No, and I've seen them commonly over 40% for some cards.
Yeah, so I would say this is going to be, if you're lucky, 12 to 15%, if you're like perfect credit, high income earner. Otherwise, your credit card could go all the way up to 40%, right? So
is it worth at this point, if you're capable and have enough credit, to like find a low interest rate credit card for this particular situation and try and get approved for it quickly? That seems to me like it would take too long to get for people in a crisis situation like this.
Typically, I mean, yeah, probably too long for people in a crisis situation. I mean, if you're looking out and trying to go buy groceries tomorrow, then you just need to put it on your credit card and
for what you
pay it off as quick as you can. And I think, let's say in that example, like I need groceries tomorrow, then you can toss it on your credit card. But if you want to explore one of these other options, like a personal line of credit or a personal loan or a 401k loan, you could get the money to pay that credit card off. So you're not paying, like, especially if your interest is like 20-25%, then you're not paying that crazy amount of interest while you're waiting to get your paycheck. You've paid that balance off and you subbed it out for a lower interest rate with the personal loan.
Right, because the personal loan interest rate, you said somewhere, hopefully like 4% if you get a good one, right? Somewhere closer to 7 to 10%, somewhere in that range, right? That's a lot lower than 40% if that's your bad credit card, right?
Right. And if you can, do your 401k, then you're paying the interest to yourself. So that could be a good solution too.
Yep. So just you have to do that equation of like you have to look at all the different ways that you're spending money, how much is that costing you, all the different loans that you're getting to help balance that out, and then shift the money around to pay off the most expensive interest rate.
Yep.
Right, regardless of where that is.
Exactly. And I guess, make sure you're getting enough money to make sure you can keep paying all of your bills for, I would say at this point, at least, around a month. Nobody knows how long this is going to take, but I think that would be pretty safe if okay, at least for the next month, I know I can put food on the table, pay for all of my utility services, especially this time of year. It is like freezing up north, right? Like negative zero, below zero. So you want to make sure that your heat's not going to get shut off and you're going to be well fed and you have enough gas in your car because you don't want to run out of gas on the highway when it's like a blizzard, right? So you want to make sure that you can afford all of these necessities, is what I would call them, and have enough money to do that for a little bit longer, right? So the last one that I wanted to mention that I wanted to kind of warn people about, because I think it's kind of where a lot of minds would jump, right? Like if I don't have my paycheck right now, where can I go? Oh, payday advance, right? It's a very logical conclusion to jump to, but I had never actually really explored this very much, and I was really shocked at what I found. So I just went to a place near me and put in the information of like what my credit is, what I make, all of that. And I said, okay, let's say that I need a loan amount of $300. They would charge me $35 to get that $300. And then every 2 weeks. So if I don't pay it back within 2 weeks, I'm getting hit with another $35 fee. And then in 2 weeks, if I need to get more money, then I have to pay another $35 fee. So it just like compounds. All of a sudden you're at like $70 the second week and then $105 the third week, right? And it just keeps going. And I actually did the math on this. It would be equivalent to having a 300% annual interest rate.
Oh, wow.
So where we're talking about like a credit card being terrible at like 40%, and then this is just like 10 times that. Like it's blowing it out of the water.
Right, because when they offer it to you, it's only like just over 10%, right? $35 out of $300 is just over 10%. So that seems nice on paper, right? That's comparable to what that we were talking about the personal loan could be for such a small amount of money. But that's every 2 weeks, right? That compounds every 2 weeks. Right? So that's a lot different than what the interest rate that the bank tells you what it is, because they do everything based on an annual basis, right?
Right.
So they only, that's 10% a year, not 10% every 2 weeks.
Right.
So yeah, the payday advance places from a marketing perspective look, oh yeah, quick and easy. And then basically it's kind of like how loan sharking used to be portrayed, right? Or is, I don't know anything about loan sharking, but, right, you are owed this money, or you owe this money, and if you don't pay it back, things get dangerous. Right?
Exactly.
And so those places are very, very risky. So you recommend staying away from those under all circumstances in a scenario like this for these people in this situation?
I do. I think the one situation that they can be helpful is if you need cash right now, right? So if your bank account is at zero and you need cash for something. Now, most of the time in today's world, we can get by with credit cards. But occasionally, I know sometimes people do need cash for whatever reason. And you can't get cash from your credit card. Now, I take that back. Some credit cards will function as a debit card in the ATM machine, and they will charge you a slightly higher interest rate on any money that you take out. So that is one way. But if you do need cash for some reason, that is a very quick way to do it, which is why they're appealing to so many people. So that's one way to do it, or you can just use a credit card and get the cash out. Now, I think the people that are probably going to be hurting the most are people who don't have credit cards. There are people that, I actually read a book about this one time called Unbanked, and there is a whole population that is underserved in the current banking system where they're not approved for bank accounts. One example of this is truck drivers. Because they don't necessarily have a primary residence to call home, they can't get a bank account. And so if you don't have a bank account and you don't have a credit card, then, right, you're kind of SOL and you have to go to a payday advance. So they do serve a certain function, and I don't want to give a blanket statement of like nobody should ever go there under any circumstance, because there are certain situations where that is your best bet and you just have to suck it up and pay the fees. But I just wanted to I guess, give out these other options for people who do have a 401k, or maybe they set up a line of credit when they got their mortgage years ago and they forgot about it. Or they have access to friends and family member who are willing to give them a loan. Because when you're in this situation, it's so easy to just jump to what you see driving down the road every day. I mean, I know when we drive basically anywhere, we always see a payday advance, right? So it's right there. It's super accessible. And if you need to do that for the short term, great. But I would really urge you, once you get that, in the next 2 weeks until that you have to pay that $300 back or whatever it is, explore these other options and see if you can get your needs met in a different manner, if that makes sense. So that was a very long, wishy-washy answer, but I would use them as a last resort, but they can fill a certain function.
Okay. So what if I have like money in like a mutual fund or something, and I have like a midterm money set away, but my emergency fund is running dry, or that wasn't as full as it could have been for how long this scenario is taking, right? I didn't plan that I was going to have zero income for, let's say this goes for 2 months, right? And I have 2 kids or something, right? And it's a bad situation for me to be in. Is it a good idea to go down these roads, or is it smarter for me to draw from like my midterm money that's in my mutual fund? Or how detrimental to me is it to draw from that money, I guess?
You really like to ask the loaded questions.
Those are very situational.
It's very situational, yeah. And it's really hard because I think sometimes, I've talked to some federal workers that they've been through shutdowns before. So they're like, whatever, it'll be over soon. And if it's really going to be over soon, then it's best to dump everything on your credit card, because at least, the way credit cards work is it's not like you put it on there and then tomorrow the interest starts accruing. Like, you have to wait until your next statement hits, right?
Yep.
And so if your credit card balance was at 0 before this all started, and then you've racked up, money these past few weeks while you've been, waiting for your paycheck, if you think you're going to get paid in the next 2 weeks, well, you could still have that all in your bank account before your statement hits. Mm-hmm. So you won't pay any interest on that. So it's a little bit hard to say for such a short scenario. I would probably, get by with my emergency funds and credit cards. But before I would start taking out loans, I would probably sell some mutual funds. Because I hate being in debt. I hate paying interest I don't need to. And, that's a tough question to answer, because there's going to be a lot of different opinions on this, right? Because some people are like, never touch your midterm money if you need that. You want to keep it in there so you're not pulling it out when because the market's also been kind of bouncing around, right? So right. You could be selling low to have to buy high later, which is really bad investing advice, right? But I think in this situation, if it goes on for a month or 2, I think you could get by with these short, quick answers. I think if it went on longer than that, like I know for me, if I was in a situation where I lost my job tomorrow and I wasn't going to get paid for 6 months or something, I would probably draw money out of my mutual fund as an answer. And it also depends, so I want to caveat that with saying I would draw out of my mutual fund. These would be midterm investments, not my retirement funds. Because so mutual funds, tomorrow I could go and sell some and have that money, no penalty, nothing. If you sell like stocks out of your 401k or mutual funds out of your 401k, you will have penalties because unless you're 65 or older, right? Or 59 and a half and older. So if you're in your, 20s, 30s, 40s, early 50s, you are going to be paying taxes on that money, as well as you're going to be paying a penalty, which I think can be pretty high. We'll say 15 to 30% range, depending on all the factors. So I would definitely not sell money out of your 401k, but instead I would urge you to explore the loan option.
Yep. Okay. So it sounds like, for me, I would look at the personal loan. I would look at the 401k loan as like quick returns when I know my paycheck is coming back. That's not going to hurt me at all in the long run, as long as there's short-term loans like that. Those would probably be my top 2. Obviously, if I could borrow money from friends and family, right, I'm going to get my paycheck again, right? And so therefore there's very, very low risk at that. That's obviously number one, because that's free for everybody in this particular scenario.
Yeah, so my top 3 would be, tap into my emergency fund until that runs out, and then turn to friends and family and just explain what's going on and say, hey, I know I'm going to get paid eventually. I just don't have it right now. And then after that, I would look into 401k loans. From there, it would get a lot harder. Again, if I thought it was going to be very short term, I would probably just throw it on my credit card, knowing before I need to actually pay this and accrue interest, the money will be in my account. And then after that, I would probably look into selling some mutual fund just to cover the gap. Now that's, again, implying I know a lot of people in this situation might not have investments they can turn to. They might not have friends and family they can turn to. And then I really think your best bets are going to be, just putting on a credit card, paying it off when you do get your paycheck, or looking into the personal line of credit or personal loan if you can make either of those work. So hopefully that answers all of your questions. Do you have any other questions about this, Brett?
I know for a lot of people that live and work and go to like churches or whatever their religious affiliation is, there's a lot of programs out there though too that are helping out people, especially in this situation. There's a lot of people with open arms, especially during this time, and for times of hardship for other areas in the community. So those are other areas as well. I know several large church communities will offer some type of repayment program or payment program for people in hard times. If they qualify for that, there's like a meeting or something you just have to go to, and just, the hardest part there is to like ask from people you see every day that they can give you some money for that. But that is another option also. We've known people that have gone through that before. Absolutely.
And I think, one other thing I want to mention is GoFundMe, because that's a huge way to crowdsource money. Maybe you don't feel comfortable going to one friend or family or to one church group and asking for a large sum of money if you need to pay your mortgage and all of your bills. I mean, we're talking about thousands of dollars, right? Just to keep things going in a household of 4 for a month. And if you don't want to ask one person, you can create a GoFundMe. And sometimes it helps, right? Because it's kind of like the hive mentality of like, if everyone pitches in $5, then you got it, So that's another way to explore too. But again, before you start thinking, I need thousands of dollars, remember to call your mortgage provider or your loan providers, even student loans, and just ask them if they're willing to delay payments or offer any sort of relief right now, because a lot of them are. So
cool.
All right. Well, thanks so much, guys. As always, if you have any questions, I will drop all of my contact information in. And thank you so much for all of the feedback lately. And we've had some really good questions asked. So we have some great episode ideas just from getting some more listener feedback. So if there's any topics that you want to cover, feel free to drop us an email. And again, all of that will be inserted in right after this. Thank you so much. Hey guys, thanks for tuning in to this week's episode of Money in the Bank. Make sure to subscribe to us on the iTunes or Stitcher app so that you get weekly alerts every time we post a podcast. Or if you want, you can visit my website, moneyinthebankpodcast.com. And if you want to reach out with any questions or further comments, please email me at Angie@moneyinthebankpodcast.com. I look forward to hearing from you.
Money in the bank.